Hey guys, welcome back to another video. This is Makia Forex. So I'm going to show you guys how the non-farm payrolls impact the forex market, and this is what we have to put in our forex journal. If you want to become a successful trader, then you need to have a journal to actually help you to see how you're progressing in this particular stuff. So before I go to the back screen, I want to show you guys my journal. This is my economic news journal. It means each time there's a market news being released of high impact, I have to record down the news in this particular book, because when I record the news, I'll be able to know how to predict the entries in the next news release. This also is my normal trading journal. As you can clearly see here, this is my trading journal. This is the new one I just bought because the other one is almost getting finished. So every single trade I do, I put my entries here, my exits, my emotions, and whatever happens in the market. The truth is that, right, as a trader, right, we're all bound to make mistakes. Humans are normally prone to mistakes. So whenever we make a mistake, we have to put it down, because next time you are likely to do that same mistake. But if you're able to review yourself, learn from your mistake, you kind of like learn how to reduce your mistakes and improve your successes. So I'll have to write down the things that I succeed at and see how good I'm at in those things. Then I can now use these things now to improve myself, to kind of like upgrade myself in those things and try to reduce the mistakes I make in forex trading. You need to have a trading plan, and I have got my trading plan. I'll show you guys in some upcoming videos, but for now I want to show you guys what happened during the non-farm payrolls. Let's get into it really quick.
So on Friday at 2:30, we had a non-farm payrolls release, and this is it right here. So we can actually see that the non-farm payrolls for January was 517k. Meanwhile, the forecast was 185k, and the previous was 260k. So because the actual release was greater than the forecast and the previous, it means that there are more people in America that are having jobs. When this happens, when the release is greater than both the forecast and the previous, it means that the dollar index would automatically rise like crazy. And if the index rises like crazy, it means any pair that is against the dollar will normally fall. And a pair like gold, we saw the impact. This is gold, and this is the 50 minutes time frame. This is the candle at 2:30. We can see what happened. A strong bearish candle to the downside. This candle alone is good enough to set you on fire, because if you took a sell after this point, immediately if you took a sell after this point, you're going certified bearish. Those who got the news release, immediately they sold this pair, because the actual result is greater than both the previous and the consensus. It means that the pair will keep going bearish, and it got bearish. As you can clearly see, it got bearish. Also, they had the IMP. This is the calendar right here. We had the ISM, non-manufacturing PMI. It was also bullish. That means that the result was actually better than the previous and the consensus. So this actually made the gold to become very weak compared to the dollar, and the gold started selling, it started falling, and it started falling. So right now the issue is that whenever we have this news release, there's always like a time limit, right? It has like a 4-hour time limit. It means after 4 hours, when this news is being released, it will not longer impact the pair as it's supposed to impact the pair. So any pair that's against the dollar, we're gonna see it falling until it will get to a point where it is oversold. Like this point right now, this is actually a point where I'll say it's oversold. What we just saw right now, it will repeat itself very soon. Before the end of the year, you'll see it's something similar like this. You see the consensus, you see the results either being higher than the consensus and also the previous, or you see the results being lower than the consensus and the previous. And if that happens, if the result is lower than the consensus and the previous, it means that the pair will fall. It means the US means the dollar will fall. But if you find out that the results, right, are higher than the consensus and the previous, it means that the pair will rise. That is just how you're supposed to trade the non-farm payrolls, and if you know about that, then you can know how to make some money, because very soon, I think next month, we'll have another release of the non-farm payrolls.
So guys, that's what we saw during the non-farm payrolls. We saw how the market reacted when the news was being released. We saw how the pairs were volatile, and what happened. It means that if this same scenario happens again, we're gonna see exactly the same stuff. So you have to write these things in your journal. When you journal these things down, you are likely to make profit the next time it happens. Don't get angry. Let's say you lose money in the market, or let's say the market goes against you. Learn from your mistakes, because if you can learn from your mistakes, you'll not be able to make them again. So what do you think about this video? Leave it down in the comment section. Thanks for watching. If you got any suggestion, also drop it down, as we'll be releasing more and more videos on tutorials and kind of like advices in the forex market. So with that said, thanks for watching. Bye.